Everyone, here's Gilles again for your tips on trading. Welcome back to my channel. In this video, I'm gonna discuss about the basic due diligence element you gotta go through for a successful trading strategy. First of all, the first element I'm gonna mention is your entry setup. Your entry setup gotta work like a musical chair, right? It's like consider the market as the music and the technical indicator to see if the music is still singing or not. Like spot what the price is doing like currently at the moment you are watching the chart, and then trying to use a technical indicator to see if whatever the market is doing as you are watching it is sustained or not. That's what I'm calling the musical chair. And if there's any signal, or if like from your understanding of technical indicator you feel like the price is going to reverse or the music has stopped, don't get into the trade, like, or wait for a next trading entry, or you just switch another pair. I've been trading for years already, and I don't use pending orders. I don't use buy limits, stop limits, sell limits, whatever it is. I don't use pending orders to get inside the trade. I only use market orders. I watch the price, I analyze it. I will do another video where I walk through the process of spotting if whatever the price is doing now, and I hope you will have a clear idea of whatever I'm talking about. So your entry setup, as I was saying, you gotta think of the musical chair and use the technical indicator to see whether the price, whether like the environment is showing that the price is still going to move into that direction or not. And then use your technical indicator for an exit point. Like, I don't believe in lagging indicator or whatever, like let's say lagging indicator, a leading indicator. I don't believe into that. Like, for me, all the technical indicator are lagger, because technical indicator are based on calculation of all price data. So I really think it's very naive to think that technical indicator can tell you like get inside the trade. I really don't think that. What it can do is like maybe you're already inside the trade and it just gives you further information to remain to the trade or to add another trade. But to get inside the trade, you don't need technical indicator, because that's what happened. Because usually you get inside the trade because the technical indicator like give you an entry signal, and then usually after the next, if you're a swing trader, like usually the next day you're gonna reverse. It's not going to show it anyway. Or if you're a day trader, usually like next or couple of hours, the signal gonna be totally different. Like it's going to be a strong sell signal. That's what I'm saying. Technical indicator, like, never use them as leading indicator. Use them as lagger. Like, they sustain your decision, or they tell you when to get out. So that's what I'm saying. Like, use them to see if the music has stopped, or if it's time to take your profit, or whatever it is. And now I'm gonna discuss about the second element for your due diligence. The second element of your due diligence is your risk management. On any trade, you gotta be able to know how much you are willing to pay to have the trading opportunity. How much you are willing to pay gotta be in a range. Like, from the system you are trading, you have to be able to have, you gotta be clear in your mind, like from your trading system, like usually how many pips you are willing to lose for a certain amount of profit. And in this same element, you have to know how many amount of profit you are able to book for any single trade. It's very important, and to have a very fixed range. Like, for my system, my risk at stop loss range is between 50, like it's between 50 because actually I use point, but I'm gonna use pips here because it's the more common term used, and it's a little bit confusing. But well, usually I use 1,500 points. So for my risk management, so it's between 1,500 points and 2,000 points. That's my stop loss range, and it never changes. It's always between that range. And for my take profit, it's usually between 130 point and like 600 point. Usually it's between those range. I don't violate that. So even when I want to take my profit, even when I'm analyzing my technical indicator to see where I'm going out, if I've reached target, if I've reached a target range, I do not hesitate to pay myself or to cut my losses. And that's how I manage to cut my losers short and to ride my winners. Riding my winners basically is like, it's not riding them indefinitely. It's like riding them until I'm within my take profit range. If my profit are not within my take profit range, I will let my winner ride until I have a clear sign of exit point. Now the last part of this due diligence checklist is your time allocation. Every single trade, you gotta have a time lag, you gotta have a time expectation, you gotta know like how long it's going to take you. And this time lag will differ whether if you are from a swing trader or you are a day trader or a position trader or a scalper. Usually a swing trader will allow himself a couple of days and weeks. Me, I'm a swing trader, but I usually trade the monthly and weekly chart. So I have trades that remain open for a month, 3 months, 4 months. I have trades that can stay that long, but I'm a swing trader. Some would agree with that and say if you're a swing trader, you gotta like maximum weeks. But myself, I have trades that open for a couple of weeks and even month. Now, if you're a day trader, like you gotta know like about it after a certain amount of hour, you gotta stop that trade, whether it's losing or not, because usually your entry setup are based on daily data, and usually whatever you do beyond that time interval, you are just gambling. You are no more trading rationally. That's why you must have a time expectation. Yeah, so to sum up the 3 elements: your entry setup, your risk management setup, and then your time expectation for any trade entries. Thank you for watching. It was Gilles from Camex Capital for your tips on trading. If you have any question, don't hesitate to mention them on the comment section below, or you can contact me through my email address on the description section as well. Tips on trading. On one of my previous videos, I've been talking about the basic due diligence process you gotta go through for a successful trading strategy. And I promise you into that video that I'm gonna do another video to discuss about whatever I was talking about. So here we go. So let's get started. First of all, let me zoom a little bit on the screen we're gonna work on. Yeah, I think it's gonna be good enough. Yeah. So the first step, remember on this first on the video, like it was a theory. This is going to be a practical example. So on this chart, in this chart is the euro. I will put it a little bit. This is a live account. You can see it with the cursor here, and here's the instrument: euro, South African rand on the monthly chart. So this is the first chart you're going to analyze and to see whether we can get into a trade or not. First of all, here's how my system works. I have my moving average, the blue and the red line. You can see them all over there. Sorry, my chart is a bit fussy, and let me delete one of the indicators, like delete. Yeah, so you can see a little bit clearly. Yeah, so here's my chart. You see the blue line, and you see the yellow lines are my Bollinger Bands. The blue line is my moving exponential moving average, and the red line, the blue line, is my exponential moving average, and the red line is the 9 period, and the blue line is the 26 period moving average. Below I get my ADX, and here below is my money flow index, and here is my volume. We ain't gonna use the volume for this example, so I'm gonna delete it. So those are the key elements I have, and the price, of course, like the candlestick. So here's my process, how I do. This is how I do before entering into any trade. Remember, I was talking about the musical chair. And you're gonna, in this example, we're gonna see if the price is like, if the music is still playing, if it's still time to get into a trade. First of all, personally, I love using big time frames because it's filter a lot of noises. I don't use like one, and even if you see there, my smallest time frame is the 1 hour, which I barely use. I don't even use it. I almost never use it. I just use it sometimes for the sake of my daily trade entries. But usually I don't. The minimum chart I'm using is the 4-hour time chart. So let's keep going. So I always start first with the monthly time frame, and when I start with the monthly time frame, I zoom out and I see the price action. You can click on this chart. You can clearly see that the price is growing. You can clearly see that the price is doing higher high and higher low, and you can clearly see that. You can have a trend line to see to show you that the price is clearly uptrending on your monthly time frame. And then the next thing you see is the position of the price against the moving average. Currently, the price is still trading above your moving average. Still, like, it's currently touching the blue line, the blue EMA, but it's clearly an uptrend. And then if you go below, you will see here on the ADX, like it's really confusing here. So it's a very neutral signal here. And then on the money flow index, you will see that it's going down. So it means like from the uptrend, the momentum is slowing down. So we're gonna go now. I'm gonna go to the next time frame. And remember, keep in mind, successful trading implies using different time frame. It helps you have a very good probability trading entries. The market is so complicated to be trading in only one time frame. So if you don't have the ability to trade multiple time frame and you feel like your brain can't grasp the concept of analyzing different time frame at the same time and analyze the messages, in my opinion, you are just not ready to trade. You gotta train a little bit yourself to be able to do so before going live. Now let's go to the weekly time frame. Now, what does the weekly time frame is showing us? On the weekly time frame, we can see, let's zoom out a little bit. We will clearly see now the price is trading below the moving averages. And now you can see, if you go to the ADX, we see that the red directional movement and is above. Now it's no more unclear. On the weekly chart, it's clear that the bear are above the bulls when you just see the ADX. And now let's go down on our money flow index. We see our money flow index here. It has been crossing the overbuy line and is returning and is targeting the oversold point. So the money chart shows a very strong bullish movement, but our weekly charts show the complete opposite. So for my system, I will just say the music is not singing, the music has stopped. So I'm gonna wait for another signal. So I'm just going to skip this trading pair and go to the next one. We can go to the daily charts too and see. Before going to the next pair, I'm gonna go through the daily chart and see. On the daily chart, you see clearly that the price is strongly bearish. It's a strong sell signal. But me, because I only trade according to the monthly chart, every signal against the monthly chart, I'm just gonna ignore that. So I'm gonna wait a couple of days or weeks to see until the price on the weekly and daily chart are aligning with the monthly chart. Then I will say the music has started again, and then I'm gonna trade until the music stops. So that's how I trade my system. So let's go to the next trading pair. The next trading pair I'm gonna analyze is the Great British Pound, is the pound yen. Here is our graph. We're gonna start on the monthly graph. Let me remove the Ishimoku technical indicator first to avoid a little bit of noise for the sake of this video. Ishimoku Kinko delete. Yeah, let me delete my zoom pattern too. Yeah, now our chart is clear. Oh, let me delete also this volume indicator. Yeah, so now let's come here on the monthly chart. You clearly see that the price is strongly downtrending, and you can check it out if you put the highest highs, the two highest highs on the chart, and you put the trend line on it. You will clearly see that the price is strongly downtrending, right? And now let's zoom a little bit more. And now when we zoom in, let's spot our Bollinger Bands. You can see that the price is tagging strongly our Bollinger Band, and here we are on the monthly chart. So the price is strongly touching the Bollinger Band. Let's go to the ADX. I use the ADX to analyze the strength of the trend. So the price is strongly trending currently. So you see the DI minus is above the DI plus, and the ADX line with the green line is above the 25 level. It's actually at, you can see what the cursor is, it's at 37%. I'm not gonna go into detail on how to read this thing. You can, the part of your trading journey is to do your own research and to know what this number mean. So you can clearly see that the bear on the money chart are strongly showing strength against the bulls. And now let's go to our money flow index. I love the money flow index because this indicator shows you the oversold and overbuy point with the volume encompassed into the technical indicator. So you have volume in the volume imply you have the volume information included, and you have the overbuy and oversold of the high and lows included in only one indicator. And what you see now, you see that the price is strongly, let me zoom this a little bit more. You see that the price is strongly oversold. So a Bollinger Band tag on the lower band, and you see the strongly oversold point, and the ADX, the DI minus is clearly above the DI plus. On your money chart, it shows very strong sell signal. So the music is still playing on your money chart. Now let's confirm this going on our weekly chart. You see exact thing, like you see the let's zoom out a little bit. The price is still strongly downtrending from our higher, like from the low end, from the highest highs. And let's zoom in, and you see the Bollinger Band is strongly open, showing, oh my god, sorry for that. And it also, so it means it shows strong volatility, and it shows high probability price movement. And let's go down to our DI minus is still above the DI plus, and the ADX line is at 61% level. So it still shows that the musical chair, like the music is still playing, so it's still a very good time to sell. So this means, like, if you set a sell entry, you have very strong probability for a couple of next days that the price is going to move at least more than a couple of 100 pips with you. And now let's go to the daily graph if you want. At this point, I will straight away get into my trade, but for a sake of day trading purposes, I'm gonna go to a daily graph. And you see the price is, that's so beautiful, like the price is clearly trading below your moving average. You still see the same setup, like the DI minus is above the DI plus, and you see on the MFI the price is reversing from the overbuy point, and it's very strong sell signals. In this point, I don't need a perfect entry, I don't need a sell limit or whatever. I will just set a straight sell entry, and then I can get it live. It's my live trading account, and I can get into a trade right now because I already have trade pending, and from my risk management I've already used my maximum margin allocation, so I ain't gonna use a trade here. So, and if let's say I get into this trade and I'm selling, let's use the horizontal line. Let's say I get into this point, right? This is my entry point. Now my let me change the color of this line. Anyway, you're just gonna use the red line. Then I'm gonna set my stop loss here, where is usually I use fractals for my stop loss limit. So if I get inside here, right, to do this, you click and you click and hold, and then you move the mouse, and then you see how many points you're going to lose. And I do this with the monthly time frame. So here I'm gonna have like, it's something like almost 15,000 points to lose, which is something like equivalent of 1,500 pips. It's also because it seems a lot because it's a pound. The Japanese yen have the different quotation than other major currency pairs. Yeah, so this is basically the risk for my entry. So this is how much I'm willing to risk. And now my take profit, usually I avoid taking profit at extreme point, and I use a smaller time frame to spot my profit point. So let's just keep using the weekly chart, and then my take profit, I'm gonna put it like around here. And now let's calculate how much profit I have approximately. It's like something like 3,500 points, something like 350 pips, right? Now let's say some trader will say, oh, the risk is very high than my profit. But if you have very strong probability to reach that profit target, and let's say you enter 1,000 trade using these setups, and then the probability to reach your take profit is like you reach your profit like 95% of the time, believe me, the risk of reaching that stop loss point, the probability can be very low if you have very good trading system. So when you will compound your profit, and you will compound, and if you monitor your trade, and you will see that you will have that capability to exit the trade before you even reach your profit target, but you will still be able to book decent profit. And to keep this video short, I'm gonna stop here. And if you have any question, I can make another video about it. I don't like very long video to allow you to digest the content. So, but that basically how I like my entry setups. And then about the time allocation, which is the last part of my due diligence, I will allow my as I use the weekly chart and monthly chart to set my entries. I'll usually allow myself a quarter. A quarter is like 3 months. So I have 3 months to see if the price is going to do this distance or this distance, and then I close my trade. And it does not mean that I have to use the full 3 months. But usually at that period of time, it's like the maximum time allocation I use to analyze my trades. I can cut my losses short within or take my profit within, but that's the maximum amount of time I give for any single trade. And as the fact that you see on my trading system, you can see that the stop loss range is very higher than my take profit point. It's very important for me to trade very narrow position size. That's why the money management come into play. So it's going to be all for this video, and thank you for watching again. I really appreciate your time. This was a very long video, and if you have any concern, you can contact me. You have my email address on the description section below. And